with the algorithm. Let's start this again. It's going live any second now. Hello and welcome back to Crypto Saving Expert, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. So if you are new here, please don't forget to like, subscribe, hit that bell notification button and make sure to tune in every day to hear what's going on in the world of crypto. So today we have Bitcoin up 1.4% to $26,772. We have Ethereum up 0.16% to $1,728. And on the weekly chart, we have actually seen Bitcoin turn green. Now, we'd never thought we'd see the day where Bitcoin is positive. It's been a long time coming. We've seen some nice movements to the upside. We are going to be discussing why we have seen that movement to the upside today. We have a huge amount of news to discuss. So let's just get straight into it. Before we do, please don't forget to like, subscribe, hit that bell notification button, and go over to CryptoSavingExpert.com and sign up to that brilliant website with all of the information you will ever need. Let's take a look at this article here. So Peter Schiff warns us that the US dollar decline will be far greater than Yellen warns, and he said the Fed Chair Powell clearly worried about the financial crisis. Now, this comes after we did see some positive news in the US last week. We saw inflation drop to 4%. We saw a pause in the interest rate hikes. However, to be honest, that wasn't really reflected in the markets. So just recapping what happened here, in June 2022, inflation in the US hit 9.1% year on year, and we've got that down to 4%. Now, that has been a battle. We've seen interest rate hikes continuously, but we have seen that inflation drop to 4%. The US have a target of 2%, so there is some room to go. We still have some hikes to come, but although we've seen that pause in the interest rate hikes, we are expecting to see more this year. So it's expected that we are going to see 2 more interest rate hikes this year, and the Fed have actually projected that we're not even going to hit that 2% target next year. They're expecting inflation to reach 2.5% at the end of next year. So we still have a very long way to go on this journey of trying to get inflation down to 2%. It's not an easy process at all. Interest rates are incredibly high. They have been paused at the moment, but we are expecting to see more hikes in the future. And the impact on the markets was not so great last week as it should have been. Let's take a look at what's going on in this article though. So Peter Schiff predicts larger US dollar decline than Yellen expects. Now, we have seen some fear. Yellen has warned us about what did she say here? There would be a slow decline in the US dollar as the global reserve currency, emphasizing concerns that sanctions imposed by the US have motivated a number of countries to look for US dollar alternatives. And she cautioned that the decline in US dollar dominance is something we have to accept. Now, we've also seen that Fed Chair Powell is clearly worried about the evolving financial crisis. We've seen him say, what has happened here is Schiff has said, Powell is clearly worried about the evolving financial crisis, but doesn't want to spook markets. So he's done hiking, but doesn't want to admit it. So there's a lot of fear in the markets right now on the future of the US dollar. We all know that the US dollar has a negative correlation with Bitcoin. So typically when the US dollar is going up, Bitcoin is going down. And when Bitcoin is going up, the US dollar is going down. There's that negative correlation there. But this is something that we need to be keeping an eye on and keep being wary of, because this massively affects all of us. Let's take a look at the next article here, because this is sort of in the same token here. We are seeing, let's make sure that the stream is all running correctly over on my end. We are seeing here that the IMF wants to create a global CBDC platform to compete with the threat of cryptocurrencies. Now, we've seen a lot of central banks acting a little bit scared of cryptocurrencies and the benefits they can bring. But we've seen here that the IMF believes central banks need to create a global CBDC system to combat the threat of cryptocurrencies. Let's take a look at this article. Let's zoom in a bit so you can all see this a little bit clearer. The IMF wants to create a global central bank digital currency system. And she said the IMF has already begun developing a concept for this platform. So domestic CBDC is not enough. The IMF has been extremely supportive of various CBDC projects being developed by central banks across the globe, and believes central banks need to develop their own digital currencies to compete with the threat of crypto. For those that don't know, CBDC is central bank digital currencies. These are digital currencies that are issued by a central bank. So essentially, it's just fiat currencies online, basically. They are different to cryptocurrencies. However, if CBDCs are ran on blockchains, they could positively impact the cryptocurrency markets. If CBDCs are ran on blockchains and the central bank digital currencies are creating a blockchain, it would probably it definitely would be a centralized blockchain. It would be governed by the central bank. But to teach people how to interact with that blockchain and create transactions on that blockchain, they're teaching people how to use cryptocurrencies. And that's the positive angle we can look at CBDCs. There are some negative things about CBDCs. We can see that it is programmable money. A lot of people fear that the central banks could limit what we do with our money and have a lot more control over what we do. So there are pros and cons to CBDCs, but we can see here the IMF are feeling a bit threatened by cryptocurrencies and saying here, look, domestic CBDCs are not enough. Yes, we've been pushing them. Yes, we want to see them be adopted, but we need to do something bigger here because cryptocurrencies are global currencies and our CBDCs aren't going to be able to fight with that. So they can see here, as of June, roughly 10 countries are close to crossing the finish line in launching a CBDC, while more than 100 countries are in various stages of development. So these projects are primarily focused on creating digital versions of national fiat currencies, with interoperability mostly an afterthought. And the few projects that have cross-border payments brewed into their foundation are limited to a handful of neighbouring countries. So we can see there that although these countries are creating domestic CBDCs, regional CBDCs that are basically just turning their physical cash into digital tokens, aren't quite understanding the progress we've made with blockchain technology, that interoperability, that ability to send transactions cross-border with very small transaction fees and very fast transaction speeds. It still doesn't compete, whether it's digital or not. So we can see here that the central banks need to make they've said that the central banks need to make global interoperability the primary focus of their projects and develop a common regulatory framework for digital currencies to support. Now, if we are going down the CBDC route, I would say this is an important factor. I know a lot of people in crypto are very much against the CBDC idea and want to stay far away from it. Let's continue though with the next article and see what else we have in store. We are going to talk a little bit about regulation now, see what is going on here. So before we continue, please don't forget to like, subscribe, hit that bell notification button, and make sure to tune in every single day. If you haven't already, make sure to go to cryptosavingexpert.com, the best cryptocurrency website out there. Hit that big blue sign up button and get access to our newsletter every single Tuesday at 11 a.m. BST time. Get access to our completely free courses and get access to the latest market data and cryptocurrency news as well. We are your one-stop shop for crypto. We've got everything you need all on one website. Let's take a look at what is going on in the next article here though. We have bill recognising crypto as regulated activity in UK passes House of Lords. So the Parliament's upper house have passed the Financial Services and Markets Bill, which includes language that would regulate cryptocurrency assets. Now, I know a lot of us in cryptocurrency are crying out to have clarity on regulation right now. We've struggled for that in the US. The US have not created clarity on the regulation there, and they are just pushing companies offshore, essentially. Companies are looking at the US and saying, I don't even want to try and get regulated in that area because it's just so hard. It's not easy. They've not created a framework that companies can follow in order to operate in the correct way. So they're just regulating by enforcement. They're suing companies left, right, and center instead of just creating some framework, pushing cryptocurrency companies out of the region as quick as possible. And that's causing a huge amount of problems for them now, and it's going to cause a huge amount of problems for them later down the line. So we are seeing that continue within the US, and whilst they are pushing companies offshore, other regions are fully taking advantage of that. We've seen Hong Kong want to become a cryptocurrency hotspot and push it. The regulators in Hong Kong are actually urging their banks to work with cryptocurrency companies. So they're really becoming this environment where all of the cryptocurrency companies can easily get involved in that region. So we're seeing companies move from the US to Hong Kong and to other areas that have that clarity and have that clear regulation. We are now seeing the UK's House of Lords pass the Financial Services and Markets Bill today. We have also seen that the UK wants to become a cryptocurrency hotspot. So, are we going to be the next Hong? Interesting. We'll have to wait and see. Let's take a look at this article. So on July 20th last year, this legislation could impact the cryptocurrency markets considerably. With the endorsement of the House of Lords, the bill is now one step closer to becoming law. Introduced last year to leverage post-Brexit opportunities and empower financial regulators, the FSMB initially included a provision for regulating stablecoins under national payment rules. However, as the bill advanced through Parliament, amendments were incorporated to treat all cryptocurrencies as regulated activities, along with measures for overseeing crypto promotions. So the bill, a follow of the government's future regulatory framework review, is seen as a comprehensive agenda for substantial shifts across the financial services sector, including the repeal and replacement of all laws and regulatory requirements stemming from EU measures in the wake of Brexit. So what actually are the cryptocurrency regulations? That is what we all want to know. Particular interest in the cryptocurrency sector is the legislation provision for regulating crypto assets and their providers. So this development in the UK law represents an earnest attempt to introduce regulatory supervision into an industry known for its laissez-faire attitude. So the move is expected to bring greater transparency and stability to the often volatile cryptocurrency markets. So the bill also sets out to regulate buy now, pay later products. So they're looking at replacing all of those laws essentially that they had adopted from the EU. Let's take a look at the next article here and see what's going on. This is quite a fun one. Before we continue here, please don't forget to like, subscribe, hit that bell notification button, help support the channel, help us in the algorithm. And if you are watching over on Twitter, make sure to give us a follow and come over to YouTube and hit subscribe as well, so you don't miss all of these live streams. We do them every single weekday, keeping up to date with the latest cryptocurrency news, which is one of the best ways to stay in the markets during the turbulent times of the bear market. We all know it's not as fun in the bear market as it is in the bull market, but these are the times to learn and gain skills. If you learn about the markets now and you understand the markets better now, you'll find yourself so much more in the bull market because you will be well prepared for when those prices start to soar. And we all can't wait for that here at Crypto Saving Expert. We talk about it every day, and one of these days it's going to arrive. Let's take a look at this article here. So we have the Binance Bitcoin button game is back. So this is a really interesting concept and a very good way from Binance to market the platform. Essentially, this is a game where they have one Bitcoin and they have this sort of timer, this countdown timer. So it will start when 100,000 participants have entered, and the idea is to be the last person to hit the button before the timer reaches 0. So what you've got to do here is press the button, and when you've pressed the button, it moves down. When it reaches 0, the last person to hit that button wins 1 Bitcoin. So if you are interested in learning more about that game, which is pretty interesting and pretty exciting, a really nice giveaway there, make sure to go and check out this article. I'll put the link for it in the chat. And if you do sign up to Binance, make sure to check that article out. Let's see what's happening in the chat now before we continue and talk about more regulation. We can see Jason Smith is tuning in from Australia. We've got him saying, I think that the Bitcoin uptake is related to the weakening of the US dollar. What do you think? Yes, this is something we will look at the end of today's stream. Don't let me forget, we'll take a look at the DXY. Let's take a look at what is going on here. Hennett said, who is going to tell the financial sector that crypto is never a threat? The cryptocurrency should not be seen as a threat. This should be seen as an advantage. We can use this technology for good. The people that fear it are the people that are going to get left behind. First adopter advantage is the most crucial thing to think of right now. Those that don't adopt it first will be chasing to catch up later down the line. Other news coming in today right now whilst we're on the stream. We can see here Germany's $1.4 trillion asset manager, Deutsche Bank, applies for a regulatory license to operate crypto custody service. We've also seen, obviously, BlackRock filing for a Bitcoin ETF, which has made a big move forward for the cryptocurrency space. I mean, I don't think we all understand. I don't think a lot of people understand what this actually means for the cryptocurrency industry. It is huge, huge news, and I feel like it's kind of being overlooked. That is going to be a huge, huge catalyst, I think. And that is something that is really, hopefully, fingers crossed, going to gear us up nicely for that Bitcoin halving. Hopefully it gets approved before then. I know it's expected to be approved or a decision to be made in around February next year. And if that isn't approval, which it is highly anticipated it's going to be, that Bitcoin halving in April next year should be the nice catalyst for the next bull market. Fingers crossed. That's what we're hoping for. But obviously, we all have to wait and see on these things. Nothing is definite here. We can see here also MasterCard has filed a trademark application to develop crypto and blockchain software. So lots of positive news coming in this morning while we're on this live stream. Very interesting morning, very interesting week. I mean, the last 3 weeks in crypto have been absolute chaos. One story after another, but it's kept it interesting. It's brought volatility into the market. And that's what we like to see here. Let's take a look at what is going on next in this article anyway. So we have French regulator calls for global coordination on same risk, same regulation policy for DeFi. So this is similar to what we were just discussing. Given the cross-border nature of DeFi activities, the AMF asked for a globally coordinated approach to regulate the space. Now, I know some people are really for regulation and some people are really against regulation. I'm personally for regulation as long as it's clear and as long as it helps the industry evolve. We don't want something that's going to stifle growth. If we have some global regulation on the cryptocurrency sector, we all know where we stand and we all know how we can continue to develop the industry. As long as it's not just completely chopping the heads off everybody in cryptocurrency, which I doubt it would be. It would be a positive thing here. We can see here that they have said, due to the cross-border nature and reach of DeFi activities, the AMF also supports the development of a global coordinated approach towards regulation to ensure a global level playing field, which should both aim to protect investors and foster innovation. Global regulation would be an idea. Now, whether this would actually come to plan and actually be used is another question, another big question that should be considered. We can see it. I mean, it would be an interesting one. We can see right now the problems that regional regulation has, or the benefits that regional regulation that has. Some people would say, because some cryptocurrency companies, as the great example that I keep using over and over again, are finding it hard to operate in the US and finding it easy to operate in Hong Kong. So we are seeing that shift in movement, and that's meaning that some regions are going to fall behind and some regions are really going to have great benefits from this industry. So that, I mean, I feel like it would be a very, very impossible decision an impossible decision to decide a global framework to regulate this industry when a lot of different countries have very differing opinions. Let's take a look at the next one here and see what else is going on. So Coinbase criticizes SEC for dodging its rulemaking petition. Coinbase responds to the SEC June 13th filing, which snubbed the exchange's request for a rulemaking petition. So Coinbase's CEO Brian Armstrong and Coinbase, the company, have been trying to get clarity on cryptocurrency regulation for years. Coinbase actually went as a public company about a year and a half ago, 2 years ago. And prior to them being a public company, they said to the SEC, look, you're not providing clarity on the regulation right now. So what we've had to do is we've had to build our own framework. I'm going to show you this framework so you understand how we decide whether we can list cryptocurrency assets or not. And that is the best we can do. If you're not going to provide the clarity, we'll make it, and we'll be transparent with how we're making these decisions. And that was before the SEC did its due diligence on Coinbase and decided it could become a public company. Now, all of a sudden, that framework has not changed in Coinbase. The regulation has not changed. The SEC have decided you're not doing it correctly. That framework you created is wrong. But it wasn't wrong a year and a half ago, 2 years ago, when they did their due diligence and decided Coinbase could be a public company. That's the question we're all asking right now. Things don't really add up, and Coinbase are fighting that battle hard. They have actually said they're not going to unlist any of the tokens that the SEC have listed as securities in those filings against Coinbase and Binance a couple of weeks ago now as well. So they are standing their ground on this one and saying you need to provide clarity, and they've created petitions. They've really started to argue with the SEC to try and come up to fight for the whole cryptocurrency industry, not just for themselves. And so they're really making big progress for the whole industry right now, and it's something that I definitely appreciate. If you are a big fan of Coinbase and Brian Armstrong and the things they are doing for the cryptocurrency industry, make sure to like, subscribe, hit that bell notification button. Even if you're not a fan, like, subscribe, hit that bell notification button. Help us with the algorithm. Let's see what else is going on here in the world of crypto. We have Terra's Do Kwon sentenced to 4 months imprisonment in Montenegro. I mean, we've not really seen too many stories on this. I feel like everyone's over the Do Kwon news now. So basically, he forged travel documents in Montenegro. He's now got 4 months imprisonment, and then he will be shipped to the US, where he faces the rest of his sentencing, where he discusses what actually happened with Terra Luna and UST and Luna token. Let's continue with the next article then. Moving on, Binance abandons plans to register with the UK's FCA. We did discuss this in yesterday's video. I mean, it doesn't affect any customers in the UK directly. They weren't actually using this license, I don't believe. So let's take a look at this. Binance has officially cancelled its ongoing registration with the UK's FCA. The decision will not affect any customers in the UK, as Binance was yet to start operating there. So Binance had plans to create a UK affiliate. Instead of UK citizens using Binance.com, they were going to create like a Binance.uk, but they hadn't actually started operating there, so it doesn't really make a difference for UK users. What it just means is that they are no longer continuing with those plans, and UK citizens should continue using Binance.com. So no real changes here, but it just shows that they are abandoning those plans, and we've seen this quite a lot over the world, where Binance have had to step in and out of different regions as time goes on, especially now because they are in a battle against the SEC right now in the US. Let's take a look at what else is going on. So he has said he's denounced any affiliations with the firm's purported Nigerian subsidiary, calling the company a scammer entity. So just make sure to be careful there. Let's take a look at the next article here. Whole City Group says, my question is, has Hong Kong come out with any regulation on crypto-related activities? Yes, they have said they are going to regulate cryptocurrencies. They're not going to be lenient on the industry because they do want, although they want the industry to grow, they want to regulate it correctly. The regulators have also pushed the banks to start working with cryptocurrency companies in the last couple of days. So they have pushed forwards, and they said they aren't going to regulate lightly, but they are going to try and make it clear and transparent. And that is the major difference there. Let's take a look at these next two articles. So ZachXBT's legal defense raises $1.6 million so far. So he is an on-chain sleuth, essentially. He is on Twitter. He publishes all of his findings. If there's a hack, he will trace all of those transactions, follow them around the blockchain, and see what happens with them over time. Really interesting work that he does there. And somebody has sued him for defamation of character. That somebody being Jeffrey Wang, who has just bought $25 million LA mansion amid this lawsuit against ZachXBT. And we can see here that throughout this legal defense, throughout this lawsuit, ZachXBT has managed to raise $1.6 million thanks to the help from Binance, Justin Sun, KuCoin, Slowmist, and the rest of cryptocurrency Twitter, all donating funds to help him. Now, I am a fan of ZachXBT. He does interesting work, and at the bare minimum, he shows people what advantages on-chain analysis can bring and what advantages transparency on the blockchain brings to us. Let's continue with the next article now, though. Let's take a look. Is there a picture of this mansion here? So the guy that's suing him for defamation of character has just bought $25 million LA mansion, and here's a nice picture of it there. I mean, it doesn't look bad, does it? It looks very, very nice. Let's take a look at the next article and see what else is going on. It looks like the stream is a bit funny on my end. Let me know how it is on your end, if there's any problems. It looks like I'm in and out of stream. Does it look a bit jumpy on your end? Let me know. We can see here that Etherscan announces an AI-powered code reader. So another platform adopting AI to increase its services. Etherscan is a blockchain explorer for the Ethereum network and the Binance chain and some other networks as well. We can see here Ethereum's new AI tool will employ OpenAI's language model to assist users in better understanding smart contract source code and improve their decision-making process. Now, that is a huge benefit here. We look at the blockchain and we see, look, everything is transparent. We can see everything. When we are using smart contracts, we are trusting the code. Now, we can look at the smart contracts, and a lot of people don't actually understand what the smart contracts mean. They understand that they are trusting the smart contracts with their money, and that people will have looked at them and ensured that they are safe to hold investments. But the general public can't understand what a smart contract says and its risks. So having some AI-powered code reader that helps more people understand where they are putting their money and improving their decision-making process, as it says in this article, is definitely a big step forward. And that is something that causes a lot of debate around cryptocurrencies, because we have all these smart contracts. We are using smart contracts instead of intermediaries. We are creating these contracts instead of physical contracts. It means we don't have to trust a third party to support a transaction from one party to the other. But a lot of people in the traditional world are looking at that and going, yeah, that's great, but none of us can create smart contracts. None of us know how to code smart contracts safely. They have to be secure because they're holding huge amounts of funds. So we still need to support to trust a third party to create the smart contract in the first place. But if we have smart contracts on the blockchain that have been tested by professionals, and that we have AI code readers to help the day-to-day person understand these on a deeper level, that really increases the amount of trust we can have in the industry as a whole. So I'm a big fan of this one. Let's take a look at the next article here and see what else is going on. Ethereum devs consider raising max validator staking balance. So this is currently at 32 ETH. The minimum and the maximum for being a validator in the Ethereum network is 32, and they're looking to increase that to 2,048 ETH per validator. Now, there is concerns for decentralization. It could reduce decentralization, but we can see here. Let's see what this said. Although the current 32 ETH cap allows for decentralization on the network, it artificially inflates the validator set size by forcing large staking operations to run thousands of validators instead of running hundreds with a bigger amount of ETH. Now, there's also concerns around the slashing, but if you are Ethereum validator or you are interested in this article, again, I will drop the link to this in the chat, so make sure to check that out and take a look at the rest of the Crypto Saving Expert website while you're there, and press that big blue sign up button at the top there as well. If you are new here, please don't forget to like, subscribe, hit that bell notification button so you don't miss the latest cryptocurrency news, and make sure to go to cryptosavingexpert.com and hit that big blue sign up button there at the top to get access to everything for free. Let's take a look at this. So staked Ethereum is about to eclipse ETH held on crypto exchanges by 10 million coins. So the amount of Ethereum staked on the Ethereum network has grown, and it's exceeded the amount held on exchanges by 10 million coins. Now that is a massive, massive increase here. I mean, you can take a look from when the merge officially happened and we could stake our tokens. You can see there's been a massive increase over time there, and the amount of Ethereum on exchanges has dropped as more people have learned to move their funds to cold storage wallets. So staked Ethereum is likely contributing to its resilience in the crypto markets. Ethereum's 200-day moving average continues to provide solid support. So positive things there. Let's continue on, and then we'll take a look at the Bitcoin chart. We'll take a look at the DXY. We'll take a look at the Ethereum chart, and we'll see what's going on in the markets. So first of all, JP Morgan analysts believe Hinman documents will spur altcoins to mimic Ethereum. So the Hinman documents show the thoughts in the SEC behind closed doors. They were released just a week ago, I believe, thanks to Brad Garlinghouse and Ripple. These documents were released, and and they discuss a talk about cryptocurrencies that happened in 2018 and the preparation for that announcement, and when that preparation was being conducted. A lot of different people's opinions from the SEC was being thrown into it, and you can see where there was a lack of understanding, a lack of clarity, and where people even within the SEC didn't understand how they regulate these assets. So let's take a look at this. They were released by Ripple on June the 12th as part of its defense against the SEC lawsuit, and we can see that they were trying to understand how an asset determines whether how the SEC determines whether an asset is a security or a commodity, and they were trying to understand if a token can merge from being a security to becoming a commodity. We can see here, according to the lender, it said the more decentralized more decentralized a cryptocurrency is, the higher its chance that it would avoid being designated as a security. So it needs to be sufficiently decentralized. Now, that is definitely a term that is up for debate and can have some bias involved when making that decision. So we need more clarity on this. We need more transparency on this. But right now, we are seeing that analysts in JP Morgan believe that Hinman documents will spur altcoins to mimic Ethereum, to try and get into that category of, Ethereum started as an ICO, so some people argue that Ethereum did start as a security, but it's now said that it has sufficiently merged into a commodity. It's all up for debate. There's craziness going on in the cryptocurrency industry right now, and even people in the SEC said during these Hinman documents that there is a regulatory gap right now for digital assets. So we will be keeping an eye on that. But let's take a look at the next article here. Bitcoin dominance crosses 50% for first time since April 2021. Investor sentiment suggests altcoins now seen as fool's gold, whereas Bitcoin is the real deal. Now, this is an interesting conversation to have. Let me know in the chat if you are a Bitcoin maxi or you are a huge fan of altcoins. I expect a lot of you are fans of altcoins, since most of you have come from that Martini Guy's channel, and he is big on the altcoins. We do have big Bitcoin maxis in the game. I like to think of myself, if anything, if somebody said to you within the next 10 years, you can't sell any of your cryptocurrency, you've got 10 minutes to do with it all what you wish, what would you do with it? I personally would put everything into Bitcoin. I wouldn't leave my investment for the next 10 years in any of the altcoins right now. Things are volatile, things are uncertain, regulation is uncertain. The most certainty we have around regulation is around Bitcoin. Bitcoin is a commodity. Bitcoin is seen as digital gold. It's proven its stance within the markets for years now. And part of me does feel a bit like a Bitcoin maxi when I say things like this, but I also see the potential in altcoins as well. Altcoins have huge amounts of potential. They've disrupted different industries. Using blockchain technology in different industries really can help those industries change and help fix the problems within them. We've seen it disturb the music industry. We've seen it disturb the insurance industry. And we can go on and on and on with the list of industries that blockchain technology can change and disrupt. So in terms of altcoins, when we see this new technology grow and be adapted in all of these different industries, there's room for huge amounts of growth, and we can make big returns on investments in altcoins. Now, that is a very risky strategy. Altcoins are very volatile. They can be highly illiquid. We do need to be incredibly careful, but in my experience, that's where I've made the most money rather than in Bitcoin. But I just like to think for the long term, when I make my profits on altcoins, I always squirrel it back into Bitcoin. So let's take a look at the Crypto Saving Expert website a second. If you go to the courses page, if you do want to learn more about altcoins and how to choose which altcoins to invest into, make sure to go to cryptosavingexpert.com. And if you scroll down, my internet's just absolutely shocking this morning. If we scroll down to the Crypto 101 courses here, you will see that we actually have a course on how to spot altcoin gems. We have a course on altcoins. And we have all of these different courses, and that tokenomics one is really good as well if you are interested in altcoins. So I'd recommend taking those 3 courses just so you can understand the industry a bit more. Altcoins are a very volatile market, but they can they have historically provided investors with huge returns. But overall, I like to go back to Bitcoin. I do see myself as like a 50% Bitcoin maxi, if that's a thing. Like I on the scale of like full altcoin fan, Bitcoin maxi, I'm somewhere in the middle. I'm more Bitcoin maxi than some would think. I am a big fan. Let's see what JB says in the chat. Believe only in Bitcoin long term, but make, I can't see past the heart emoji, but make more Bitcoin using alts. That is my similar strategy. Now, I don't believe only in Bitcoin in the long term. I think that Ethereum could be around in the long term. I think that many other cryptocurrencies, and even cryptocurrencies that have not yet been created, will exist in the long term and be a vital part of our day-to-day lives. But we need to understand that there's thousands out there right now, and many of these won't survive. We see from bull market to bull market, the top 10 cryptocurrencies change massively every single time. Now, I do think those changes will start to slow down slightly, but And altcoins are a great opportunity to create profits, but overall, I am a big Bitcoin fan through and through. Let's take a look at this. Bitcoin dominance crosses 50% for first time since April 2021. Do I think this will last? Probably not. Let's take a look at the Bitcoin dominance chart here, dominance on TradingView, and see what's going on here, if it's going to let me see anything. The internet is not being my friend today. It's beeping at me. I don't know what's going on. What is beeping right now? Let's just mute it. Pretend there's not a problem there. Bitcoin dominance. Let's go to this. We can see here, Helen said, I know Bitcoin is the big deal, but better for big investors. What am I going to do with Bitcoin, with my $10? Exactly, and that's what I mean. I mean, altcoins have huge potential. They also have huge risks, but who doesn't like a little bit of risk every now and then? Let's take a look at the daily chart here, so we can see Bitcoin dominance has exceeded that level of around 48.5%, 48%, that it was kind of capped at for a period of time. Let's also add on the Bitcoin USD chart here, so we can see, I've just put it on a new price scale. I'm sure that will be fine. Let's zoom out to the weekly chart here so we can get a full perspective. You can see that in the Bitcoin bull market, at the peak of the bull market, Bitcoin dominance was pretty low. Now, in the bottom of the bear market, you can see that, where's the bottom of the bear market here? The 2019 bear market, you can see, I mean, which one's which? Right, okay. This, you can see that Bitcoin dominance was at around 56%. Bitcoin dominance really hit a low down at 35% during just after the peak of the bull market in 2017. Now you can see here, Bitcoin dominance really hit a low just after the peak of the bull market in 2021. So Bitcoin dominance is on the rise if we take a look at the peaks of the bull markets instead. When the peak of the bull market, when the start of the bull market, should say, occurs, usually we are seeing altcoins pop off. So there's an interesting correlation there, and definitely something we should be keeping an eye on. Is this a positive move for Bitcoin dominance, signaling that we are going to see a nice move to the upside for Bitcoin and the entire cryptocurrency industry? Interesting there that we are seeing some fluctuations there. Nice to see that we've broken through that level of resistance. Let's take a look at the BTC USD chart here and see what else is going on. Let's get rid of that line. What's going on here? Everything's chaotic. If we take a look at the 4-hour chart, you can see here that we are back within this zone once again of 26,600 to 26,900. Bitcoin just likes this level a little bit too much. Let's take a look at the daily chart here and see what's happening with this descending wedge that we've been talking about. Let's get rid of all these lines. If we take a look at this chart here and we get that level of resistance and push it across there, and we get that level of support and we push it across here, you can see we bounce that level of support once again. Right now, I would say we are in a very crucial level. Now, there's two options here. You can take the level there, or you can take all of these levels of resistance, but we come to the same conclusion. If we close a candle above the $27,250 level, it's incredibly bullish for us. We have this descending wedge, which has a higher probability of breaking to the upside than to the downside, meaning there's a high probability we are going to break this resistance. But if we don't, we could be in for a few more bounces within this range before we make that decision. But what I would love to see right now is a daily candle close up here, see us come down, use that level of resistance as a support, and then start to move to the upside and retest some of these levels of resistance that we've seen for a very long time now here on in the markets. Now, I do have to prepare you. I also have some negative opinions on what's going on right now. Why am I drawing lines with the paintbrush? You can see here we have some levels of support that could hold strong as well. But realistically, I've been looking at the markets recently and I've been thinking, what really is in store? And this is something I've been saying here on the channel for a while now. So we've seen this big surge to the upside in the start of this year. Till about March this year, we saw a massive gain. In fact, if we take the measurement tool, you can see from the start of the year till April the 15th, we saw an 86% gain for Bitcoin, never mind the altcoins. So with that in mind, I don't personally believe that we can continue to see that much growth throughout 2023. Now, obviously, I've been saying this for a while. We haven't really seen that much growth throughout 2023. Since April 14th, we've seen a decline of 12% in around 70 days, so in around 2 months. This is something that I expected and something I continue to expect. I'm expecting some more sideways action for the rest of this year. I mean, we are seeing volatility. We are seeing changes in the bigger economics. We are seeing interest rate changes. We are seeing inflation changes. They do affect the markets. However, I feel like we are kind of trapped within this range right now. We've had a lot of negativity hit the markets, and the price of Bitcoin has managed to hold pretty strong. So there's only a certain amount of things that can really be so negative for the markets right now, I personally believe, that could push us to new lows. Alternatively, we are not at the Bitcoin halving just yet. And if history is repeating itself, we're not going to get a new all-time high until after the next Bitcoin halving in April 2024. So that also puts a cap on what can happen right now. So I believe we are bound within this range, which we are going to see some fluctuations between. We are going to see some volatility in. But I think we're bound between this range until around January next year, and then that's where I believe things are going to get a lot more exciting. The volatility is going to hit, so I do believe that we have some time right now. Obviously, I might be completely wrong. Nothing is financial advice. This is just what I'm thinking of the markets right now from looking at historic data. I mean, history might get thrown completely out the window. The trend might get completely broken, but I just like to follow the trends personally. So what I'm seeing right now is a 6 month period where we can all knuckle down, learn as much as possible, improve on our skills, and get ready for those next volatile moves at the start of next year, which should continue, fingers crossed, for a nice year or two. So make sure to stick around. So those that stick around during these dull times and those that stick around and learn about the industry during the hard times are the ones that perform the best during the good times as well. So make sure not to miss out, because you will kick yourself if you do. But before we do, please don't forget to like, subscribe, hit the bell notification button. And that is all we have for today. I will see you all back here tomorrow.